So, what do you do when you know you're right, but the entire world is screaming that you're wrong? I mean, what happens when your single greatest strength, that unwavering conviction you have, becomes the very thing that brings you to your knees? Well, that's the story of Julian Robertson, a Wall Street legend, a true predator who walked away from the hunt right at the exact moment he was about to be proven catastrophically correct.
So picture this, it's March of 2000, and Julian Robertson, founder of Tiger Management, I mean, we're talking arguably the greatest hedge fund manager of his generation, he basically surrenders. With those words, he tells his investors he's giving them their money back, billions of dollars. Not because he messed up, no, but because in his eyes, the market itself had gone completely insane. This is the moment a living legend just declares the game is broken.
And that's the question at the heart of this whole thing, isn't it? Why would a predator just walk away from the hunt? I mean, they called him the tiger for a reason. This guy was built to stalk value in the wild jungles of the stock market. So why on earth would a hunter like that, at the absolute peak of his game, suddenly decide to just quit? To figure that out, we've got to go back.
Yeah, before the fall, there was the legend. And make no mistake, for almost 20 years, Julian Robertson wasn't just a player on Wall Street. He pretty much was the game. People called him the Wizard of Wall Street, and his fund, Tiger Management, was an absolute force of nature.
And look, the numbers here are just staggering. They show you his complete dominance. Between 1980 and 1998, Tiger Management pulled in an annualized return of almost 32%, and that's after fees. That is more than double the S&P 500. So he wasn't just beating the market, he was absolutely lapping it, year after year. This wasn't some lucky streak, this was a system. So what was the secret sauce? Well, his method was actually pretty straightforward, at least on the surface. Long/short equity. He had this team of analysts, famous for being completely obsessive, like they'd literally kick the tires on a company, and their job was to find the absolute best companies to buy and the absolute worst companies to bet against or short. It was a whole strategy built on one simple belief: logic and value always win. And this quote right here, it just captures his worldview perfectly. For Robertson, the market was supposed to be a rational place. The good stuff would rise and the junk would fall. Simple. It was a fundamental law, like gravity. This wasn't just some investment strategy he cooked up. This was his identity. But that identity, it was about to get tested by a completely radical new religion. See, in the late 1990s, something just shifted. The whole dot-com boom wasn't just another financial trend. It was a full-blown cultural phenomenon. A whole new belief system grabbed Wall Street by the collar, and it was one that seemed to defy every single one of the old rules. And suddenly, this huge chasm opened up. You had these two totally different worlds. Over here, you had Robertson's world, the old world, right? It ran on things like earnings, cash flow, fundamentals. But over there, you had the new world of the tech bubble, and it ran on a completely different kind of fuel. Mouse clicks, momentum, and this crazy idea of a new paradigm where profits just didn't matter. It was a world he couldn't accept, and frankly, a world he wouldn't accept. And look, he didn't just disagree with the whole dot-com thing. He saw it as an out-and-out fraud. He called it a Ponzi pyramid, and he was absolutely convinced it was a speculative bubble that was destined to collapse. So what did he do? He did what he'd always done. He bet against it. He started shorting all these high-flying tech stocks that he believed were totally worthless. He was standing on principle. But that principle, well, it was about to get incredibly painful. And this right here, this is the heart of the paradox. This is that gut-wrenching moment where conviction starts to look an awful lot like failure. It's the classic story of being right, but being so ridiculously early that the world has plenty of time to absolutely crush you for it. The famous economist John Maynard Keynes had a line for this: "The market can stay irrational longer than you can stay solvent." For Julian Robertson, this wasn't some quaint academic theory anymore. It was about to become his brutal day-in, day-out reality. Just look at these numbers. They are absolutely devastating. In 1999, while the tech-heavy NASDAQ just exploded, soaring over 85%, Tiger Management lost 19%. Can you even imagine the psychological pressure? I mean, just picture it. You're watching all your peers get fabulously wealthy buying stocks that you know are complete garbage, while your own fund is just bleeding money because you refuse to join the insane party. That is the loneliness of being a contrarian. And the pain, it wasn't just in his head. No, that underperformance had a very, very real consequence. Investors, we're talking even partners who'd been with him for years, they lost faith. They pulled their money out to the tune of $7.7 billion. And that triggered a death spiral. It basically created this vicious cycle, right? Investors get nervous, so they start pulling their money. To pay them back, Robertson has to sell his good assets, his winning stocks. But selling those winners hurts his performance even more, which of course just spooks more investors into leaving. It was exactly what one of his old employees called it, a run on the bank. The tiger was trapped. And that brings us right back to that moment, that fateful decision in March of 2000. By this point, Robertson wasn't just fighting the market anymore. He was fighting his own investors. He was fighting his own balance sheet. And maybe worst of all, he was fighting this deep, gnawing exhaustion. And this quote, this gets right to the human core of the whole thing. It is a moment of just incredible honesty. Think about it. The Wizard of Wall Street, a man whose entire identity was built on understanding the market, finally just admits the game doesn't make sense to him anymore. He's 67 years old. He decided the fight just wasn't worth it. He was done. And here is the punchline to this entire tragic story. He closed his fund in March 2000. In that exact same month, the Nasdaq hit its all-time peak, and then the whole Ponzi pyramid started to collapse. The market crashed by nearly 80%. Robertson was right. I mean, he was cosmically, spectacularly, unbelievably right. But he was just weeks too early to survive it. But wait, the story doesn't actually end there. Because in a really strange twist, the death of Tiger Management actually gave birth to an even more powerful dynasty. In a way, Robertson's biggest failure as a fund manager led to his greatest success. And this is just the cruelest part of the paradox. History proved him completely right. But because he was first to shut down, the investors who had actually stuck it out with him, they weren't there to cash in on that vindication. He kept his own money in those short positions and did incredibly well for himself. But his investors, they were already gone. So instead of just packing it in and retiring, Robertson did something pretty remarkable. He took a chunk of his own capital and he seeded his best and brightest analysts, gave them the money to start their own funds. And these became the legendary Tiger Cubs, a whole network of managers who would take his philosophy and go on to dominate the world of finance for the next 20 years. So, in the end, yeah, the original Tiger Fund died, but its DNA survived and multiplied. Robertson absolutely lost the battle in 2000, but in losing it, he created this entire ecosystem that would go on to shape the future of the whole industry. You could almost say his philosophy became inevitable. Which brings us to the final and really unsettling tension in this story. When you look back at everything he did, was it discipline or was it failure? I mean, sticking to your principles, that sounds heroic, right? But what if all it means is that you're just too early? Resisting the herd sounds like the smart move, but what if you're actually just ignoring a fundamental shift in how the world works? Yeah, there are no easy answers here. And it all leaves us with the one question that must have haunted Julian Robertson, and honestly should probably haunt any of us who think we have conviction. At what point does your discipline just become stubbornness? When does that strong conviction of yours curdle into fatal pride? And here's the hardest question of all. If you were in his shoes, watching the whole world go completely mad while your own world crumbled around you, how would you know when it's time to walk away?